Nothing can stop me. I'm all the way up. All the way up. I'm all the way up. I'm all the way up. Nothing can stop me. I'm all the way up.
Hello superstar, it's 𝗕𝗿𝗃 here again. Welcome to another tutorial video on my trading strategies. In this video, I want to show you how I trade volatility 75 index with the 15-minute sniper strategy. You know, we've done this over and over again, and as you can see on our Telegram platform, Freedom Trade House, you can see we use these strategies a whole lot to bank a lot of profits day in and day out. And also the same strategies, you can see people use it and they share their results, massive results on Instagram. You can see how the feedback has been, the results people take their signals with, and they're all fine. So why am I doing all this? I just want you to understand that what we're doing here at Freedom Trade House is not a joke. It is serious business, and I didn't come here to waste your time, right? You can see on YouTube, you can see the comments from my previous video, how a lot of people got value from it, right? The results that they were getting with the strategies that I shared on the previous videos. So if you're a beginner and you really want to make a lot of profits in the year 2022 or whatever year you're actually watching this video now, then you want to pay a very close attention to every detail in this video, because they've been carefully filtered, right? They've been carefully filtered to help you get the best result. I'm not talking some sort of bullshit here. I'm here to just guide you on what you need to know as a beginner so that you are going to be successful, and it's going to save you the stress of trying out a lot of false strategies and so on. All right. This strategy that you're about to see now is absolutely price action. I'm a price action trader, and when I make use of indicators, in my trading, I just use indicators to increase my confirmations, right? That is what I do. So if you really want to be successful at trading, you should have a concrete understanding of price action. And that is why I'm going to take you through the concept of price action on this video, so you understand how you can apply it on the 15-minute chart to increase your profits, right? Remember this: any strategy that doesn't tell you where to place your stop loss, that strategy is bullshit, right? And for you to get the locations to place your stop loss, you need to understand price action. And that is why I'm taking my time here to make you understand it. If you get it right, then you get the result. But if you don't get it right, you keep looking for the result. And that is it, guys. So this is it. As you can see on this chart, you can see the pictures. I used the same strategy on the 3rd of February, and I shared the trade signal on the Freedom Trade House free Telegram channel, right? You want to check that in the description of this video and show you're there so that you can get those free signals as well. And on this video, I want to show you how I came about the signal, the strategy that is backing this up, right? And I'm going to reveal a lot about the 15-minute time frame to you, right? That's going to help you to really become a master of this market in no time. All right, let's just go straight into the tutorial, and you're going to see everything from the top to the bottom, how you can really master the strategy and how you can really master volatility 75 index as a beginner. Now, the first thing I want to do, let me just get another page. Now, the first thing I want to do when I trade volatility 75 index is just take a quick look at the market on the higher time frame. Now you can see how the price is really falling down deep. Now look at this. Take a look at the higher time frame. Why do you take a look at the higher time frame? Because you want to have a clue. You want to have a clue on where price is headed at a time. You want to have a clear view of where price is headed. Because when you do, you're going to know whether you're trading in the middle or you're trading at the top or bottom of a particular trend. And when you do that, ensure that you identify key details. And these details have to do with the basics of technical analysis, that is support, resistance, and trend lines. Now, as a beginner, the first thing you want to do is to open your eyes, or let's say train your eyes to be able to see these things. See the support, resistance, and the trend lines. If you train your eyes to do that as soon as you open the chart, then I tell you, you're going to become limitless. because that is what price action is all about. Identify levels where price is going to reverse, and that is how it goes. So when you do that on the daily time frame, you want to step further to identify the trend line, support and resistance on the smaller time frames. That is what this market is all about. And every chart gives you a unique support, resistance, trend line levels. You just want to do all of those things over and over again as a trader, right? So you go through until you get to the 15 minutes time frame, and you just want to go further to do one more thing. That is market structure. You want to identify the structure of the market. If you've been following my videos, I do talk about this market structure a whole lot. There are primarily two types of market structure, right? Primarily two types. We got a ranging market. Just follow this tutorial and you're going to see something. I want to show you something huge. If you're going to watch this video to the very end, I promise you, your trading style is going to change, because you're going to be trading with better understanding. You will understand the market much better. So now when we're talking about the first type of market structure, it is called the ranging market. The ranging market has equal highs and equal lows, right? The top here is the high, the bottom here is the low. That is it. Equal highs and equal lows. So when you see every of this structure, whether in a line chart, just like this, or in a candlestick chart, or in a bar chart, it still applies that way. The second type of market structure is called the trending market. Just follow me. I want you to understand it. I know a lot of beginners out there, you guys are watching this right now, and that's why you're on YouTube. That's why you're searching for this. And if you peradventure just ran into this video and you're like, okay, what's this talking about? Yeah, it's for you, all right? Pay close attention to every detail, because it's going to help you to become a better trader. Now, when you see price giving us higher highs, you can see this is a high, this is a higher high than this, and this is a low, this is a higher low, this is a higher low. When price gives you this, this is called an uptrend. And when you have the reverse, something like this, take a look at this. When you have the reverse in this order, price giving you lower highs and lower lows, it is called what? It is called a downtrend. Now that takes us to the second type of market structure, which is a trending market. All right, that is the second type of market structure. We got the trending market and we got the ranging market. I'm not going to talk about the third one because it doesn't matter so much now. If you want my previous video, you're going to learn about it. That's the video on the 1-minute sniper. I did talk about that. You want to go take a look at that now. All right, so these are the basic types of trends that you see in the market. And out of the two types of market structure, what you really want to trade is the trending market. Now, in the beginning of this video, I did talk about support and resistance. And so what is support and resistance? These are zones where we got what? These are horizontal zones in price where we got massive or aggressive price reversal. Either you call it price reversal or price rejection. You can see, like in this zone here, you can see price got rejected here as soon as it came from the bottom here. The bulls took it to this point and immediately the bears took it downward. So this is a resistance. When it is reversed at the top, it is called what? A resistance. But when you have the reversal at the bottom, something like this, you can see it tested here once, and this is the second time, right? It is called support. Now, when the support and resistance don't happen in the horizontal manner, when they happen in a diagonal manner, that is where you refer to it as what? A trend. You refer to it what? As a trend line, right? So in this trend setup, we got the resistance of the trend, that is the one at the top, and the support of the trend, which is at the bottom. Let's look at this. In this, if we got it orderly, you could have something like this. So we got the resistance of the trend, the one at the top, and the support of the trend, which is at the bottom. So now when you understand this concept very well, then you'll be good to really go to trade this market. And that is what we have on what the market structure aspect of this video. The next thing I want to show you, because we are going to be diving into the 15 minutes time frame. This is the setup right here, and I want every one of you to really get it clear. I'm taking my time to break down this entire concept to you so that you will begin to see the market in a very easy way. Freedom Trader is all about simplifying complex concepts and making it easy for the layman to understand. The 15-year-old, a 20-year, 25, 60-year-old to understand this. All right. And that's why I'm bringing every of these things to you. So another concept that you really need to understand in trading is called supply and demand. For you to work with this strategy, then you should understand supply and demand. I believe that by this time you could have been hearing a lot of people say supply and demand, right? I haven't heard this concept in economics. Yeah, we got it in accounting, right? Every of those things, it applies here. That's what price action is about. So what is supply and demand when it comes to economics? We got that when the demand of a particular commodity, let's say the price of the commodity is low at this point, and then we got a lot of demands, that is a lot of buyers coming in to do what? To purchase that commodity, the price will what? Boom to the top, right? Because we got limited sellers and a lot of buyers, it booms to the top. Now, when every of these guys have purchased this commodity and everyone has it, and no other person is buying, who's gonna buy it from me? What happens? We begin to have a lot of sellers with limited buyers. So when everybody is selling the same commodity, if you truly want to sell to the only person who is available, what do? You need to drop your price. So everyone would rather go for somebody who's going to sell the same commodity, which has the same value at a smaller price. And that is what happens. When everyone starts selling, price starts doing what? Start dropping. The price starts dropping because you want to sell. You want to sell your commodity. So you start selling, and what happens? You start coming down. So that's what demand and supply is all about. At the bottom right here, the demand for the commodity was at the extreme, right? The demand for the commodity was at the extreme. But when price went up to this particular point here, the demand dropped and the supply, because we had a lot of sellers, the supply became too much. So what happened? The price starts coming down. And that is what this market is about, guys. You see how easy it is? What goes up must surely come down. And when it's at the bottom, there has to be a force to take it to the top side. And that is it. That is what this market just does. It goes up and it comes down. Can you see this? At the bottom here, it pumps to the top and it drops. It goes up and it drops. It goes up and it drops. So that takes a concept oversold and overbought. You could hear this over and over as regarding the market. Now, when it comes into the chart, how do you identify this supply and demand zones, right? When you come in front of the charts, how do you identify it, right? How do you identify that? You know, even following my tutorials, you're going to see that I simplify the concept of supply and demand. And I explain it as supply and demand, simply put, is the difference between two levels of rejection. I take that again. Supply and demand is the difference between two levels of rejection in the market. Now, let's just analyze that quickly. Let's take, for example, this is I want to explain how I got this set up, and I shared it. A lot of people made a lot of money. We got up to 5,000 subscribers on our Telegram platform taking these trades every day, right? So I want to explain this. Look at this point here. In candlestick, in candlestick anatomy, let's talk about candlestick anatomy quickly. I did talk about it in the previous video, right? If you've not watched that, you want to go and watch it. Just take your time. You can spend a weekend to watch a lot of my videos. It will really ignite you to come into front of the charts next week to make a lot of profit. Now look at this. This is the candlestick anatomy. This is the real body. This is the real body. This is called the wick or the shadow. This is called the wick. This is at the top. This is at the bottom, right? The wick at the top, at this extreme here, is called the high, and the one at the bottom is called the low. So what I just want to identify from this is rejection. In the candlestick, what shows rejection? The wicks shows what? Rejection. That is what shows rejection. So now if we come into this market, what we want to identify is the high of wicks. Now look at this. Price had its move at this point and it sloped down to this bottom, to this side. And we can see this point here. I said it. Supply and demand zones start taking effect on the 15 minutes time frame. That's what I'm trying to say. I told you that I'm going to show you a lot of characteristics of the 15 minutes time frame. It starts taking effect. If you see something like this on the 5 minutes, it may not be very strong. If you see it on 1 minute, it may not be so strong. But on the 15 minutes, 30 minutes, 1 hour, 4 hours daily, it becomes strong, right? And the market tends to respect it. Now look at this. We got rejection right here, a very strong rejection. Can you see a huge rejection right here? Then the next point we had just before it that we can identify really close is this one right here. You see this is low and this is higher than it. Just these 2 points, I can go over this chart over and over again, and I'm going to identify supply and demand zones. Between these two here, we got a supply because it's at the top. So it's called a supply zone. Now, if you get a rectangular tool, just like I just did, and then you drag from here to the very front, to the future, you drag it to the future, then you have actually set a trap for price. So this is what we call price trap. And what does that imply? Anytime price comes into this, you're expecting a reversal in the market. And literally, that is what happened here. This is the supply zone. Price came into the supply zone, tried to break it, but didn't succeed. There are 2 effects that happened right here. And I'm going to show you how to get your stop loss, your take profit when using this strategy. Now, the first thing that happened was price coming into the supply zone. And after that happens, that takes us to another concept in trading, which is called order blocks. It is called order blocks. An order block is a block where buyers and sellers tend to put in a lot of orders. It's actually identified on the chart as a point where, let's say, a bull turned towards a bear before a massive move to the reverse section. Let's look at this. For example, if you look at this place here, you can see that this is the last bearish candlestick we got. And immediately after it, we had a very strong bullish candlestick, which gave us a candlestick pattern called an engulfing candlestick pattern. Can you see this? So if you want to pick an order block in this, you're literally going to be looking at this zone, right? You're going to be looking at this zone here. Whenever price comes into this zone, it should buy. Guys, this is not a coincidence. That's why I'm telling you that I didn't come here to joke with you. I didn't come here to waste your time. I came here to show you the concepts that you should understand so that you're going to become a very successful trader this year. So can you see that price created this block? You just want to pick the previous or the last bearish candlestick and take it to the very bottom, extend it. So long you see an engulfing candlestick pattern there, extend it to the right. This strategy says that anytime that price comes into this block, this is called an order block. Anytime price comes in there, there's going to be a rejection. And that's why we have this rejection here. Let me show you something else. This same kind of pattern happened at the top here. You know, when price came into this part, let me just delete this. I believe you guys are following, right? If you are following, I want you to type in the comment section, I am following your 𝗕𝗒𝗄𝗃. I am following. Put it there. I am following. All right. Then I will know you're following and I will definitely connect with you through the comment section. Now look at this. The same thing, but a reverse happened here. We got the bullish movement coming to the top side right here, right? And what happened? This was the last bull that came into the order block, that came into the supply zone that we actually identified before now. And what do we want to do? We just want to do something simple. Create an order block. Extend from what? The low of the last bullish candlestick to the high of the bullish candlestick, just like this, the way I just did it like this now. You want to extend because we got an engulfing candlestick pattern. Can you see that on this same strategy, we are applying 2 concepts. The first concept is the concept of supply and demand, right? Just like we identified this rejection here and the rejection here, supply and demand. Then the next concept was what? Order block. Playing out. So 2 concepts playing out at the same time. If you stay with this video, I'm going to show you how I use one of my favorite indicators to confirm this entry for a sell, right? Confirm this entry for a very strong sell. I'm going to show you how I do that. So now we got price coming in here. So where do you take your entry? Let's get over it. How do you enter the market? The entry technique for this. Now we have identified this as a supply zone, and at that supply zone we got an engulfing candlestick coming in. The entry now is when price comes in. It's either you take your entry inside of this zone, like this candles as they're coming in, you take your entry as soon as it touches this bottom, right? Let's do that quickly. As soon as it touches the bottom right here, you enter. Then where you place your stop loss becomes the next thing. Now if you miss this entry at this first time, or let's say you've entered and price comes back into that zone as an order block, you enter again at this second candlestick. So we're going to take the entry as the second one. Now, what matters is not just the entry, it is where you place your stop loss, because it's your stop loss that actually determines the risk factor of your trade. Every position that you open comes with a particular risk. Okay, so we want to identify that. Where do you place your stop loss? It is very simple, guys. This strategy has even helped us already. We got the first one being what? The supply and demand zone. And we also got the second one being what? The order block concept. To place your stop loss, you want to place it above the zone, just above it. And take your entry inside of this block, inside of the supply and demand zone. You want to take your entry right there. So let's see how many risk or how many pips did we risk on this strategy. This is how you place your stop loss, guys. So look at this from here to here. We risk how many pips? 300 pips. If you've been following my videos, guys, if you've been following my signals on Telegram or on Instagram, if you've been following me, you're going to see that the trade setups that I take are sniper entries that require 200 to 300 pips. And the next thing, you just see trades start going your way. I don't risk a lot, right? It's all about risk management. Risk management is all about risk and reward, risking a little to get a whole lot. So now let's see, where do you place your take profit? That is what I want to show you now. If you've been following my videos very well, you will learn that where you place your take profit is in respect to what happened in time past. So we got price entering here. I would just want to place my take profit. Some people who want to take short take profit could place a take profit here. Look at this. You could place one here. But on this setup, I didn't do that. I looked at the previous block or the previous reaction we had in the market, right here, and I looked out for what the support around there that created that bounce, that created what price coming into the supply zone. So I just want to take profit here, and that is fine. Now take profit one, that is the thing about this strategy. The take profit one is usually massive. Look at this. How many pips do we got here? Take profit one is 1,150 pips. That is mind-blowing. Look at it from the entry here. That is the thing about this 15 minutes time frame. The profits you make, this is 1,174, right? The profits that you make when you're trading with this particular time frame, it is much more than when you're trading with the 1 minute or the 5 minutes, when you identify those things. So this has a way of giving you a larger view, right? So in this strategy, we got 1,700 pips as 1,170 pips as the first take profit one. Let's show that from here to here. We got this. I'm showing you live. This 1,170, right? 1,170 pips. So now, how many pips did we got as the second take profit? Where do I place my second take profit? Very easy. Identify, like what I did here was identify where we got rejection. That is a resistance in time past, right? So I identified this and I placed the take profit there. That is what you want to do. So just identify places in time past where there was reversal in the market over that your time frame, that you're looking at to get your setup. Then where did I place the third take profit? This is it here. I could see this huge rejection. So I don't want to wait before price comes. Can you see what I'm doing now? I don't want to wait before price comes into this engulfing candlestick, this order block here, because I know there's going to be a huge rejection. So I want to take profit before that rejection. And that is what gave rise to this. And that's why I want to place my take profit right here. And that is how it goes, guys. So you take your profit right there and then you rock it. Do it, Rocky, right? You rock it. You shoot. You execute. As soon as you see your confirmations, as soon as you see that setup working out for you, you execute. And that's how you take your profit. Now, let's see how many pips did this do. This setup gave us, can you see from here to take profit 3 is about what? 3,000. Can you see that? 3,000. Let's take it again. I made a mistake. From here, the green line to this point, this gave us about what? 3,500 pips. It gave about 3,500 good pips. And this setup actually has a take profit 4, which is right here at the bottom after the breakout of the order block, right down here, which got broken, right? But I won't consider that. Let's see if price took, if we want to calculate how many pips that gave us about what? That gave us 5,000 pips, 5,174 pips. Can you see this, guys? In how many hours? In how many hours? Let's say this first one. The 3,500 pips came in. You can see 10 bars, which is approximately 2 hours. 10 bars of the 15-minute candlestick is approximately what? 2 hours, because 4 of the 15-minute candlesticks makes 1 hour, then another 4, that is 8, right? 2 hours, 30 minutes. We got this in 2 hours, 30 minutes, 3,500 pips. And that is mind blowing. So now I want to show you quickly before I wrap up this thing. I want to show you, I was talking about the indicator that I use, to just stir up this and increase my confirmation for this massive sell. So I'm going to show you now. The indicator is a precious indicator, and I was talking about it in my previous video. Just ensure you go and you watch my videos. If you do, you're going to get a lot of results. You're going to get massive, I repeat, you're going to get massive and massive results on your setup. So what we're trying to figure out now is the reaction right here. Now, clearly, you could not see, or we may not be seeing that divergence on this time frame, but I can actually see a little of it right here around the zone, right? So what we want to do is to look into the price in the smaller time frame. This is where the smaller time frame now comes to take play. You see, we did every of this analysis without a small time frame, but right now we're going in there to see. Type in the chat box, see it. Guys, you got to see it. You got to see it. If you can see it, you can have it. Right? I made an illustration about Abraham. God called Abraham. Abraham, come out. Can you see it? Whatever you see, you can have. You can have it, guys. And that is how it works. Now, let's compare. Look at this. From here to here, we're having what? Higher highs. But on the MACD indicator, we're having equal highs, right? As if that is not enough. Another thing that confirmed it is if you compare this block to this particular block here, they are equal highs. But on the MACD, if you compare this block to this block here, they are lower highs. That gives you a very huge confirmation the price is about to sell. If you can see it, guys, if you can see it, you will have the result. There are no two ways about it. So what you want to do when you come in front of the chart every single day, you want to tell yourself, Sam Keys, hell Sam, I just want to open my eyes to see it. Sam Keys said, if you can see it, you can have it. So I just want to open my eyes to see it. I want to see it over and over again. I want my eyes to be open so I can see these opportunities. Because when I see the opportunities, I can have the result. That is what we're looking for here, guys. We're looking for the result. We didn't come here to joke. Guys. So there's another setup that we actually got here. So if you missed this setup from the top, I want to talk to you now about the breakout strategy, applying it here. Now, if you missed from the top here, the breakout strategy, like I taught, the 5-minute strategy for breakout and also the breakout strategy itself, you could check out those videos. They're going to help you understand this better. You can see the price broke out of this trend. Remember, I was talking about a trend. Remove this line, right? If you take off this line, I'm going to delete all those things. If you take off this line, you could actually get another entry making use of the breakout and the reversal strategy, right? Now, you could identify, what can I see? Just imagine price hasn't created every of those. What can you see? There's a low here, there's a low here. You can just pick 2. You need only 2 points. If you're following, put on the chat box, I see it. I see it. You just want to open your eyes to see that trend. So you take those levels and you extend it to the top. Now, can you see how the breakout strategy worked here? Price broke out with this huge candle and the next candle, and you see it came back up here slightly and back down, right? Back down in went. Back down it went. Now, I want to show you where this breakout strategy really now played out efficiently. After price pulled to this particular point, it reversed because of what? The other block at the bottom. Then it came back into the side to test. Remember, always remember the point of rejection. Always remember the point of rejection. That place is a place of what? Reversal. That's why you can see that price did not go beyond this. Price did not go beyond what? This particular point. Because this was the previous high. And that is what the strategy tells you. Put your stop loss above the previous high. You got in here, you could have taken the profits down to this bottom side. And you're definitely going to make lots more profit before price tends to reverse. And that is the strategy, guys. I've taken my time to explain a whole lot of this concept to you on this video. And there's just one thing that I want you to do for me, guys. I just want you to go in the comment section of this video and drop your first name and where you're watching this video from. If you're a Nigerian, let's say your name is Sam. You put a Sam and watching from Nigeria. I want to connect with you guys. And another thing I want you to do for this video, if you got a lot of value from this video, hit the like button, like the video, and as a newbie, you want to see more of my videos like this, subscribe. It is free and it is for your own good, because every day I'm going to come up here to post more videos. I'm going to come up every week, right? You're going to be seeing more videos. So if you want to get notified when I post my videos, make sure you've liked this video and also subscribe, then turn on the notification bells. It is for your own good and you're going to get massive results, guys. You're going to get massive results. You know what? I want to see you become very successful. I want to get your testimony. I want to see you really doing well because of the contents that I share on my video, guys. I'm really happy for you, because if you've watched this video to this point, it shows that you are really, really interested in becoming successful. You are really yearning for that success. And that is a step. You have taken the right action to watch this video. You can play it over and over again. You can watch other videos. Just feed your mind with enough information so that as soon as you open the charts, you'll be able to see. If you can see it, you can have it. Remember this: success only comes to those who apply successful habits consistently. You want to apply these strategies over and over and again, and you're going to have a consistent result. Thank you for watching. My name is 𝗕𝗿𝗄𝗃𝗃, and I'm always here to help.
Nothing can stop me, I'm all the way up.